Most people think buying a dividend ETF means you're just getting a set list of stocks. What if I told you with SCHD you're actually buying a system, a proven process that upgrades itself every year? I remember when I first started investing, I was just looking for something reliable, something that could grow my money without me stressing every time the market dipped. And that's exactly what SCHD became for me, a calm in the chaos. In this video, I'm breaking down everything that changed in SCHD's 2025 reconstitution, what companies were added and removed, why SCHD shifted heavily into energy, what's happening with its dividend yield and growth, and why I'm buying even more of it than before. I'll also show you how my $5 a day SCHD investing experiment is going and what my most recent dividend looked like. By the end of this video, you'll see exactly why SCHD continues to be one of the smartest long-term investments for passive dividend income. Let's get into it. So what makes SCHD so different from the 100 other dividend ETFs out there? It's not just the stocks it holds, it's the system behind them. SCHD tracks the Dow Jones U.S. Dividend 100 Index, and once a year, that index hits the reset button. It reevaluates every stock, filters out the ones no longer making the cut, and upgrades the portfolio to hold only the strongest dividend players. This is a data-driven, rules-based strategy. First, a stock has to have at least 10 consecutive years of dividend payments. Then it's screened for size, liquidity, and yield. From there, the top candidates are ranked based on 4 key metrics: free cash flow to debt, return on equity, dividend yield, and 5-year dividend growth. The top 100 companies by composite score make it into SCHD. The result? A portfolio of high-quality dividend payers with strong fundamentals and a history of returning value to shareholders. This year's reconstitution took place on March 21st, and it brought some bold changes. 20 new stocks were added, 17 were removed. And just as importantly, SCHD shifted its sector strategy in a major way. Let's start with the new additions. The biggest is ConocoPhillips, now SCHD's largest holding at 4.6%. Other major adds include Merck, Schlumberger, Target, General Mills, and Archer Daniels Midland. We also saw Halliburton, Murphy Oil, Autoliv, and American Financial Group join the lineup, along with a diverse mix of smaller positions. In total, energy saw the biggest boost. Sector exposure increased by 8.8%. Consumer staples also saw a 3.7% increase. These moves signal that SCHD is looking for stability and inflation resilience. On the other side, 17 companies were removed, including some familiar names like Pfizer, BlackRock, and U.S. Bancorp were all cut. Tapestry, C.H. Robinson, and even Dick's Sporting Goods didn't make the cut this year. Other deletions include H&R Block, Cracker Barrel, Guess, and Zions Bank, all with higher payout ratios or weaker fundamentals. Remember, a higher payout ratio means the company is paying out a large portion of its earnings as dividends, which can signal risk if profits drop or the business runs into trouble. Financials took the biggest hit in sector allocation, dropping by 8.7%. Healthcare saw a 2.1% decrease. So what does this tell us? It tells us SCHD is adapting. It's leaning into sectors that historically perform well during inflation, like energy and consumer staples, and trimming back exposure to areas like financials that are more sensitive to economic cycles and interest rate risk. If inflation sticks around or rates stay elevated, SCHD is now better positioned to weather it. Let's break down the dividend numbers. The new index yield is 3.87%, which nets out to about 3.8% after fees, still one of the highest yields among large cap ETFs. The 5-year dividend growth rate has improved to 8.35%, and SCHD's profitability score remains excellent, 9.32 out of 10, putting it in the top 10% of large cap value ETFs. But it's not just about the metrics, it's about the results. So far in 2025, SCHD is up 1.9%, while the S&P 500 through VU is down 3.66%. The NASDAQ 100 through QQQ is down over 5.79%. SCHD has not only held strong, it's quietly outperforming. That's part of why investing.com currently rates it a strong buy using its technical indicators. If you've been following this channel, you know I've been investing $5 a day into SCHD since January 1st, 2024, and I haven't missed a day. That's over 450 days straight of consistent investing. I received 4 dividend payments last year, and I'm about to get the next one on March 31st of this year. Thanks to this daily habit, I now own over 85 shares. I'm earning $21.06 in passive income, all of which will be automatically reinvested, compounding my growth even faster. That's the power of staying consistent and letting the fund do its job. Because at the end of the day, this is what makes SCHD great. It doesn't just sit still. It evolves, it upgrades itself, it filters out the weak and brings in the strong. And best of all, You don't have to do anything. You just hold it, and SCHD does the work. You get exposure to 100 high-quality dividend stocks without having to screen or research a single one. Now look, no ETF is perfect. SCHD's payout ratio is a little high, around 63%, and some sectors like energy bring more dividend volatility, but SCHD gets the big things right. It stays consistent, it sticks to a proven formula, it delivers income, and it's built to protect you when the market gets choppy. That's why I'm still holding it. That's why I'm buying more. In addition to my $5 daily SCHD investment, I have started a position in my Roth IRA as well to be a perfect complement to the growth ETFs I hold there. The SCHD continues to be my favorite dividend ETF in the market. So what do you think about SCHD's 2025 changes? Are you buying more? Do you like the shift toward energy? Drop a comment below and let me know. And if this video helped you understand SCHD a little better, make sure you hit the like button and consider subscribing if you haven't already. And check out this video right here. I think you will really enjoy. Take care, and I will see you next time.